Hey Blockies, it's Charlie here. What a wild start to the year in the crypto world. With all the price fluctuating and tax season just around the corner, we have a crypto tax expert and Web3 founder here to help answer all your questions about crypto tax. Please welcome Harry Dell. Hey guys, welcome to episode 70. Wow, Cozzy, 70 episodes. Look at us go.
My God.
How time flies.
Thank goodness there are people who want to talk to us.
Well, today we've got the amazing Harrison Dell, who's well known in the scene within Australia and also globally with your TikTok channel, Harry, which has been blowing up.
Yeah, it's funny. I tried to neglect it, but it's clearly just too interesting, and people even watch it. And I can't even post that much anymore. But I still make time to come on stuff like this because this is the fun stuff. So thanks for having me, gentlemen.
No worries,
man.
Anyone who's listening to for the first time to Harry, can you just give a little bit of rundown? What's we have a tax advisory as well. I think tax legal side of things. So I would love for you to give a bit of a rundown what you do, so that then after that we can get into it.
Yeah, sure. Well, it's very hard to say what I do because it's more here. But to describe the background usually says enough. So yeah, I worked at the ATO for a few years, auditor, legal advisor, worked in private practice for a few years, and just over 2 years ago, I started Cadena Legal, where we do specialist tax advisory work for crypto projects and individuals, general like people with lots of money because they have tax problems clearly, a lot of international tax. So that's including a lot of stuff in the UAE, US. Unfortunately, US is disgusting in terms of taxes, and Southeast Asia and exotic island countries as well. So we get to see a lot of interesting stuff happening in the market. And go pretty deep on them all, solve some really weird problems. And I think we're pretty unique in that, we're one of sort of 2 or 3 taxed crypto experts that there are, because there are very few of us.
That's awesome. So you just touched with a few parts of the world, right? Few continents, I would say.
Yeah.
So based on your experience, look, it's going to change based on the business model, but at this current stage, which tax country would work better for our space? Like generally, not like specifically, but generally, where would you go for example? It's not US, I take it.
No, it's not the US. The US is not a good idea. It depends exactly what you're doing, but say like it's a token, just a regular fungible token. The British Virgin Islands is still the best place to do that. As long as it's not a security, you can generally deal with their local, it's called VAST regime, which regulates digital tokens and the issuance and management of those. British Virgin Islands, it's actually a pretty good, pretty regulated jurisdiction. It's number 1 tax haven in the world.
It is, isn't it? Yeah.
It is. It's also the number 1 funds jurisdiction in the world. So they have a lot of experience with, people all over the world investing in these funds domiciled in these tax havens. Mm-hmm. And I think I've told you gentlemen this before, but tax havens aren't bad inherently. What's bad is how people use them. So they're a good place for funds. Yeah. So you don't want to tax the fund. You want to tax the people who invest in the fund. And just like with that, if I'm issuing tokens in Australia or the US or UK or even, lots of other countries, and I raise $1 million, I've just sold stuff for money and I've probably got income. And investors don't really tolerate paying the ATO 30% of your capital raise.
Yeah.
Because if you said, I got to raise, an extra 50% because I got to pay a third across to the ATO, everyone's going to lose their mind.
Oh, 100%.
So instead, people are forced to use these jurisdictions. But British Virgin Islands, it's English common law. It's a good place to be. There's also places like the Cayman Islands, which are also really good. A bit of stricter regime there. Quite an interesting regime with their foundations law. Set up DAOs. DAOs aren't particularly cool right now, but the cycle turns, wheel turns. And sort of the third part of those kinds of structures is like, well, we've got to employ people and pay people generally. You can just set that up here.
Yeah.
So say it was you gentlemen running a project, you just run your payroll here, you'd get reimbursed some funds. As you get bigger and bigger, there's some tax compliance take into account and there'll be some tax to pay in different places. But it's relatively well known where to start from. And where you're going to end up can be completely different. We're seeing an interesting market at the moment with projects sort of merging. Have you noticed that? I think there was 3 tokens merged in, like one project bought out 3 different tokens.
Oh no, what is that?
Yuga Labs have been doing that. They bought
They were NFT
they
projects,
bought still crypto projects,
but not tokens, so because tokens will be a bit
One
is the NFT a token.
Yeah, what are you saying, man?
There was one that was tokens, and it was a pretty big deal. It was all a centralized exchanges had to do all these swaps.
Yeah.
And stuff. And there was 3 different tokens got bought out, and those holders got placed with the token that bought them.
Oh wow.
It was like a swap arrangement.
Yeah.
Which is really interesting because that's kind of like sophisticated business activity. We're doing M&A now, mergers and acquisitions.
Yes.
And I think that's going to happen a bit because there's lots of fractionalized little projects with little utility. My personal startup that I founded, Juby, we actually got merged into another project. We didn't have a token issue at that point. We were intending to. We hadn't done it yet. But, that other project needed the IP.
Yeah.
So we did a merger.
Yeah.
And I think there'll be that consolidation. The tax news, as always, is bad. Sorry, gentlemen. But there are like rollovers available for, say, Catena Legal merged into Blockstars.
Yeah.
I could get a tax rollover for that because it's dealing in shares. I
Hmm.
can even get a tax rollover for dealing, if we had unit trusts.
Yeah.
Swap them around.
Yeah.
But there is no rollover for swapping tokens. It just wasn't conceived at the time. So
Yes.
people are being forced actually to trigger taxable events. Some of them would be up, some would be down. It's kind of hard to react to them.
So when, for example, like in the US, like I think same in here as well. Like if you hold tax over a year, then the tax liability get discounted by 50%. Am I right?
Well, it's
Like on
the wrong way around. I'll tell you why it's important.
Yes.
So how capital gains tax works?
Yeah.
Is there's no rate of capital gains tax. It's just the amount that gets added to your income. So say you made $100 and you held it for 12 months, then you can reduce that $100 to $50, and then you put $50 on your income.
Yeah.
That's how it works.
That's how it works.
Because we have a marginal rate system,
Yes.
depending where you are on that, if you're already in the top rate, you're going to get a 50% reduction max. The reduction is actually more than 50%. Because say it puts you down into a lower tax bracket, like part of it, you might get sort of a 60% reduction.
That's right. Yeah.
But it's not like there's a discount on the CGT. It's the gain is income and you just half the amount. Yeah.
Half the amount. That's right. Yeah, half the amount. Yeah. So for example, if I bought crypto for spent $1,000, it goes $2,000, mate. Meme coin all the way. Right. If I get a 2x, and that's the highest ever I would ever reach, 2x on that, and then from that, so $1,000 profits. So if I had it for 1 year, then I will only pay, for $500 tax, pretty much. Yeah, on the $500, not $1,000. Only the $500 I'll pay tax.
Only half of it you declare on tax. The other half is exempt.
Other half is exemption. Yeah, exempt.
Yeah, but that's also taking into account your yearly pay. Is that right, Harry?
No, you add $500 to your yearly pay on top of that, and then that becomes the whole earning potential.
Yeah, so it can push you up. Everything goes into the one calculation in this country. And you mentioned the US, so the US is a little bit different. I'm no expert on the US, so if anybody is a US tax expert listening, I'm going to butcher this, and I'm very sorry. But they have long-term and short-term capital gains tax. The long-term rate, I think, is like 22%-ish.
Okay.
And the short-term rate is like 35 or 37 or something like that. So they actually just tax it differently. Yeah, you pay different tax rates at different labels. Leads to sort of like weird outcomes. But in Australia, we just feed it all into the one calculation.
Got it.
And I want to go off crypto for a second here. It does some weird stuff because it does that. There was a case a few years ago. It was called Burton, and I think he sold like a ship. Huge one, and he claimed a 50% CGT discount, but he had to pay some tax in the US. And how it works generally is if you pay foreign income tax on something, and it's also taxable here, then you'll get a credit for it.
Yeah, you can't get double tax, isn't it?
You can't get double tax, but here's where it gets really funny because you kind of can, because you can only claim the tax credit so far as the income you pay tax on over there is taxed in Australia. Because how it works, as half of it's taxed and half of it's exempt, you only get half the foreign tax credits.
Oh, right.
And the judge was like, yeah, that's how it works, but that's really dumb.
Yeah.
Like, it's pretty clear that's how it works. So it does do some weird stuff. Look, that's way off crypto. That's not really going to happen, I don't think, for people in this space. But the mechanics of this, like the mechanics behind tax are very complex. Let's just leave it.
Yep. Are you looking to integrate your business systems with cutting-edge AI technology? Our expert team is here to help you use the power of AI to innovate, streamline, and enhance your current business operations. Contact us today at 1-800-870-200 or visit blockstars.com.au. On that one, coming back to project business, Harry, how does the implications. Thank you, Cuzzy. A bit tongue tied there. How's the implications happen when a crypto project has a bunch of tokens? They have influencers over here. They have partnership allocations. They also have, say, maybe a liquidity pool in there to mix that up. And then you've got that on a vesting period where you're slowly paying people out, but that token is doing very well and it's rising. And say I had the project and I was paying people for marketing, influencer. How does that work on the tax implementations for the actual project founders? Because it could be quite dangerous. Like your token's doing very well, but as you're paying out people to keep this growth going, you're paying them with tokens, for instance. So then you're getting taxed on those transfers.
Yeah, so there's an interesting, it's a very fundamental issue. It's called derivation, like when is the income derived? And that's not normally a question that me and you would have of receiving a salary or we get paid a dividend from a company. It's all pretty clear. But there's two main rules broadly. There is, it's derived when you get it. So however that may be, wallet, whatever. It's also deemed to be derived when it is dealt with on your behalf or as you direct.
Can you unpack it a little bit?
So if it's dealt with in a way that you've directed, so say I'm getting my salary, and I go, just pay it to Cozzy. I don't want it. Like, don't put it in my bank account. I can't say I didn't derive the income because I've directed it, I've controlled it, and I said, just leave it over there. Then it's still taxable as income. Like, I can't defer stuff. I just go, just don't pay me this week, boys.
I see it. Okay.
But it creates question with like project founders. Let's start with project founders. Is, they're often on 3-4 year vesting terms for their tokens. As long as it's not a meme coin. And the question arises of like, well, do they pay tax on the basically $0 valuation on day one? Or do they pay tax every month when they get vesting? Or do they, third solution, do they pay tax when they claim it? Because often it's a smart contract function that they claim their tokens from. Answer is like, we don't really know. And obviously we all want it to be number one. And that makes sense. And it would solve that problem. But what do you do when you bring on a team member after 12 months?
That's right.
You want to get tokens. Like, I suspect people just aren't declaring it.
Yeah.
Not because they don't want to pay tax, but they want to be taxed fairly. And this comes back to that discussion of like, well, the taxes on crypto stuff just is unfair on the timing aspect. It's almost always the timing that's an issue. It's, when I'm bridging or swapping, or, when my tokens are vesting on the smart contract, like it's just like a weird time to pay tax. I haven't actually made any money. I have to sell my asset to get the money to pay tax when I haven't really got an economic realization. So it's a bit inappropriate, but I suspect the ATO would go with that it's taxable as it vests, because that's when it's received, that's when it's derived.
And that's like
and the token price goes up, then you'll start, receiving these things, and then you're going to have to dump the tokens, and these project founders are going to be significant holders. That can tank the project. It can destroy an otherwise economically viable business.
Yeah, exactly right. And even like my other question is like, okay, so that is in crypto.
Yeah.
And now we have these things called stable coins in crypto, which are pegged to a dollar, right? And it's almost like, I feel like, okay, when you're transferring that dollar and if you're getting taxed on that, it's that I don't know how that impacts. Like I use stables, and I love it. I love it because you know what? You just have to go to the bank, and the boss doesn't think about it either, because boss doesn't see it. I want to have some lunch. I can pay $10. Boom. You know what I mean?
I remember.
And boss doesn't ask. Right?
You're talking about your wife here, right?
That's right.
What about that? I'm like, is it Mr. Blockstars or is it his wife? I'm like, oh no, it's his wife.
Right. So, Stable's gonna, just really, gave me that full freedom to pay lunch whenever I want, how I want, no questions asked, right? So with that, I'm just thinking like, oh, now how does that work with the tax?
Yeah, it does some. Well, there's two answers here. One's good and one's not so bad. Which one do you want first?
Look, nothing is bad. It's always all good in my world, because I got freedom. So I got out of worries after that. So
whatever price is worth.
Whatever price, man. Whatever price, I need freedom.
So like if you're holding, say, USDC on the stables card, like it's linked to the USD fluctuations against AUD. So you're not going to have a big capital gain or loss realistically on those funds. It's just not really possible, because it's just going to be USD. Now, if you had actual USD on the card, you'd be under the foreign exchange rules, which are very different. But because it's a token, it's actually under the CGT regime.
Got it.
So, you've got to figure out, which token am I selling, first in, first out. Look, I don't even know if those cards connect with tax calculators.
I don't think so either. And I think it's a problem for me. I think it's a problem for future Corsi when it comes to in 2 months, is it? At this stage, it's not Corsi's problem.
Yeah, future problem. Yeah, exactly.
Yeah, future Corsi's problem. So
future Harrison has many problems. With the crap I'm buying at the moment. The other answer is like, well, those funds on the card, like the crypto on the card, you're intending to use that for personal stuff. Buy lunch, buy
diesel,
shop, whatever you want. You're not investing with those funds. Like they're clearly meant to be spent. So the argument would be that they're a personal use asset, because it's just like money in your wallet that you're spending on stuff, but you're not speculating on price.
Are you planning to launch a blockchain project? At Blockstars, we specialize in developing blockchain projects from your initial idea to the final product. To launch your successful blockchain project, drop us an email to hello@blockstars.com.au. Look, it's funny. I met a gentleman in Brisbane last year. During, I think it was, what was the event that we went to in Brisbane? I think it's not Blockchain Australia. I think there were
Blockchain Week.
Blockchain Week, yes, the Blockchain Week.
That event in
yes,
yeah,
in Brisbane. And we're talking about like this whole blockchain, how that's they're going to change, and the regulation, how it's going to be used, and everything else. And I don't know, for some reason, I said, look to him, like, look, I don't think we will see much, like clear path. In my head, I don't know much about this, what's happened behind closed doors, but in my gut feel, like last year was, I would not see anything for another at least maybe 8 to 10 years. Really always. Yeah, I don't know why I said that, and he is a prominent figure. He is in the in the space, and he's like, no, it's not going to happen. Why do you think like that? It's not going to be that long. It's going to be a lot faster. It's going to be 2 or 3 years, right? But I don't know why he said that. I think maybe it's like he wants to believe that the group is pushing hard. It's going to happen in 2 to 3 years. But what I am seeing is it's such a big role, right? This crypto is such a big, like it's a movement. You open once you let or what do you call it, let the cat out, or let the dogs out. You can't cat out of the bag, right?
You can't put the dogs back in after you let the dogs out. That's kind of
like, what's that meme? What's that meme coin? The dogs in the pool or something?
Yeah, dog in the pool. Yeah.
Right?
Dog in the pool.
Can't get them out of the pool once they're in the pool.
You can't get out of the pool, right? So I have a feeling, I don't know where, with my very limited knowledge in the regulation side of things, I think it's going to take some time, because governments and like these people has to be make sure that what they're doing is not going to topple the government, for example, financial, because everything works on the taxation systems. And
I don't think it's deep though, man. I forget who said it, but you shouldn't put down to malice what can be explained by stupidity. I just think government doesn't understand it. Just doesn't care. They're not even scared. They're just like, I don't know. Like I literally have had people say, Bitcoin's so expensive, like I can't buy one. Like I need to buy a whole Bitcoin. And I'm like, no, dog, you don't have to buy a whole Bitcoin. And they're like, oh, really? Yeah. Like if you looked for about 5 seconds, you'd be able to find that information. So like, I think, whether we're talking banks or government or regulators, I don't think it's we hate crypto. I think it's actually they just don't understand.
They don't understand.
Yeah.
I mean, we had the same.
It's like anything with government. Yeah. They're always slow. They're always cautious. Until, as Harry said, they realize they're losing so much GDP, and a lot of people are going offshore, and another country's got a success story, and then the wheels start turning a bit faster, in my opinion, anyway.
Yeah, that's exactly how it works. In Australia, like you guys are, you guys do R&D sort of stuff. Yeah. You'd be, claiming R&D tax offsets, but work for clients, work for yourselves, and like that regime is like very watered down. Like in the US, it's much more aggressive. You can subsist off tax refunds for many, many years with only a relatively small investment if you're doing actual R&D. But in Australia, like, 40% back, it's like, it's okay.
Yeah.
If you're doing R&D, you may as well take the free money. But like, it's not really, like the government really isn't going to fund your startup with tax deductions in this country. And it's because we tried to do what Silicon Valley did. And like, we've had some really good success stories in Australia. But maybe we would have had, 3 times as many if we were just a lot more open and we're happy to lose a few tax dollars at the expense of growing GDP. And it's a very complex economic question. I'm not really advocating for like maybe it needs to be more generous so that, we can get more of those startups. It's always a balance between contribution to the community and, economics. So it's hard to pick which one it's going to be, but Australia's always been very reactive. We haven't pioneered much stuff apart from digging it out of the ground. Countries like, Dubai, UAE, they are pioneering this space in terms of, every second person I meet that wants to go move there. And I'm like, mate, it's hot enough in Brisbane. I can't stand. No, I'm good here. Thanks. And they're capturing a lot of value.
Yeah.
They also had a promise for a very long time saying we're not going to tax people at all. And then what happened? 9% corporate tax came in for free zone companies unless they can show economic substance.
That's right, isn't it? Yeah.
Like the rules change. And then now we've got other countries. And really interestingly, the Cayman Islands is now becoming this expat destination. There's a whole bunch of crypto companies there. And they're clearly a bit salty about Dubai because they're like, oh, yeah, we've got this free zone. And I'm like, why? Like, I spoke to the guy there. I'm like, why do you even have a free zone? There's no tax, dude. He's like, oh, yeah. They basically just called it a free zone so that they could compare it with the UAE free zones.
Oh, all right. Got it.
They've actually legislated for 50 years that there'll be no tax in the Cayman Islands for like free zone companies. So if you set up there, you got 50 years locked in, you know it's going to happen. Plenty of people set up in the UAE on the promise of there's no taxes, and then they're just like, whoops, sorry, change their mind, boys. Just that's how it goes. Just show some economic substance. Don't worry about it. But, you know, the regulator there is getting quite strict. Like, there are tax dollars to be paid there. And the same is happening in Singapore and Hong Kong. You know, those tax regimes are tightening up. We saw about 2 weeks ago, some of the UK tax regimes are tightening up as well. The UK is a tax haven, just for like full disclosure. And they tightened up their non-domicile resident regime. People are living there making, you know, billions of dollars and paying, you know, pennies on the dollar in tax. And we're seeing this tightening up across the world because, you know, we've gone through economic bull market, like general economic bull market. And we've got companies like Google and Apple and other, you know, FANG at the top, and they're basically growing at CPI. If you look at the growth rates, it's not, you know, 200% a year like it used to be.
I mean, the thing is like, look, with that, I feel like, you know, they handed out all this money, you know, to create like more liquidity in the market, you know, what you call the COVID and all that stuff. I feel like people who got rich out of it was again that the bigger players in the, you know, the bigger end of the market.
That's always what happens is, you know, it's happened throughout history where the government gives everyone money, like say tax breaks for big corporations. They give the poor middle class a couple of $1,000s. What do the poor middle class do? We go to the we go to the Woolworths, we go to the Coles, we go on a holiday, we go buy a car, and the money always feeds back up to the top, to the big corporations. So, where it is,
unless you just put it all in dog whip hat, in which case.
That's right, exactly.
Yeah. Well, there's the new break case, isn't it? Dog with hat.
It's got a hat, boys. Like, I don't know what you need to know.
Right. I think look, I really wanted to talk about meme coins, but I know that we got such a limited time. Harry, we have only 4 minutes to finish off.
Oh, we had to do some tax planning for Charlie, didn't we?
Yes, we did.
I think that if this Cyberkong's Play and Collect will have to come next time, mate. That'll be,
that you just chucked that name in already.
There's
No, they're sponsoring the show, clearly, yeah.
Exactly. You know, anything for the Ron on this guy.
Yeah.
Serious.
But, man, the gamification and tokenomics within this game is very confusing, and I'd like to get Harry's insight for everyone out there, because I think Web3 gaming will be one of the next big things coming up this year. It's becoming big, but I think it's going to get a lot bigger.
I think let's park it for our next one. Hey,
it'd take me about 5-10 minutes just to explain the dynamics of it.
Exactly. So before we finish off, Harry, is there anyone else that you want to give a bit of a shout out to or anything like that? Apart from me and Charlie, before we finish off.
Oh, I love you and Charlie. Number one.
The ATO.
Oh, you know I love the ATO. No, dude, look, without them, I wouldn't have anything to do.
Yeah, exactly.
Yeah.
I'm thankful to an extent, but there's 2 or 3 really good crypto accounting firms. People come to me and they say, "Hey, can you do my tax report?" And I'm like, "Bro, I can't even count. I'm just a lawyer, man. Like, what do you expect?" And then I refer them off, and I send both of these firms quite a lot of work. And one of those firms is Tax on Chain. I know those boys have been on here a couple of times. There's also a fellow in Melbourne called Ronnie Giori, and he does a lot of work in this space in crypto Web3. There's very few of these accountants around. It's funny, like they're not even competing because the pool. Sorry, the pool. I'm thinking dog in the pool. No, pie. The pie is so big where like they don't need to behave like that. It's very much like a duopoly. You know, there's maybe 5-10 firms that do it.
Yeah.
But there's only 2 or 3 that really do it quite well, and that's 2 of them. So if people need that service, they better go and talk to them quick, because as it gets closer to June, July, mate, they're not going to be able to take them on. So you actually want that assistance. Get your reports as neat as you can. You know, get on Crypto Tax Calculator. Get it as good as you can. Get an accountant engaged so you're ready, and make it easy for them. Because I can tell you what, they're not trying to extend out how much time they want to spend with you. They want to get the job done, even if it costs them less money. It costs you less money, because they just have so much demand. You know, they're trying to help people. So yeah, those 2 organizations I'll give the shout out to. Next time I'll shout out you guys though, I promise.
Oh, thank you. Thank you so much.
Thanks, mate.
Awesome, guys. So thank you so much for your time, Harry, and for the community. Guys, please like, share, and tag Harry. Please follow Harry. Harry, if you had to send anyone your way, what are your social handles? I know that you got about 10 or 15 social accounts, but where would you like people to connect with you?
I'm like a weed, mate. I'm everywhere. So you can find me on TikTok, which is Harry Dell Tax Talk. You can go to my LinkedIn, which is my name. I'm pretty responsive there. Feel free to connect with me. I'm on Instagram as well. I think it's Harry Dell Tax Law. I'm on Twitter. I don't really go on Twitter very much, or X, or whatever. And also a website, which is cadennalegal.com.au. We do a fair amount of shit posting just directly on the website. So, and you can contact us there as well. So any of those is good. I'm very hard to miss, I feel.
Awesome. Alrighty.
Awesome.
On that note, guys, thank you so much, and Harry, thank you so much, and we will catch up with you soon.
Thanks, Cozzy. Thanks, Charlie.
See you, Harry.
Catch ya.